Welcome back to Live from Paris. It's time for business, and I'm joined by William Edwards. Hello, William. We're going to start off in Europe, where growth figures are out today.
Yeah, big day of GDP figures coming out. We're getting the whole Eurozone figures later. And in fact, the Eurozone itself is expected to be slipping back into recession, a possible double dip scenario as it's become known. But we've got figures out already from France and Germany. They are both in growth now, even though they're both showing the same number there, 0.2% growth. For Germany, that's disappointing. For France, it's a bit of good news because, of course, France was possibly on the line for going back into recession. So although Germany won't be very pleased with 0.2%, France is. Now, it could be a lot worse, of course. Let's take a look at some of the other figures that have come out this morning. We've got Greece and Portugal have reported big falls. Greece 7.2% down, Portugal 3.4% down, and Spain not quite so bad, of course, as those alarming figures, but still minus 0.3% in the red. Not good news for them either.
OK, now one effect of Portugal's ongoing recession is that companies and their assets are often available for bargain prices. Much investment is coming from countries with historical links with Portugal, particularly its former colonies, but it can sometimes be a touchy subject.
Banks, newspapers and petrol stations in Portugal are all being snapped up by its former colony, Angola. Helped by its vast oil wealth, the African nation is one of the world's fastest growing economies. A reversal in fortunes and a trend that's worrying many Portuguese.
Is this really going to benefit us or serve Angolan interests?
These orchards, 70 kilometres north of Lisbon, are now owned by Angolan investors. The fruit is being shipped off to another former colony, Brazil. But for the Portuguese producers, it's not easy to admit that they're no longer the masters here. You have Angolan investors.
Yes, but it's the president's son-in-law, and he's only investing because he was born here in Portugal.
Meanwhile, in the US, President Barack Obama has been spelling out what his red lines are in the Fiscal Cliff debate.
Yes, of course, this is that standoff between Democrats and Republicans in the United States Congress. Unless they come to an agreement before January the 1st, a series of automatic spending cuts and tax hikes will come into effect. And it's forecast that this will create a big drop for the US economy, possibly throwing it back into recession, hence the name Fiscal Cliff. Now, Barack Obama says he wants spending cuts and tax rises for the rich as part of his plans to compromise on this deal, but Republicans have ruled out any tax increases for anyone on principle. Let's hear what Barack Obama has to say on the issue. He's trying to frame it as a fight between the middle classes and the rich.
We should not hold the middle class hostage while we debate tax cuts for the wealthy. We should at least do what we agree on, and that's to keep middle-class taxes low. And I'll bring everyone in to sign it right away so we can give folks some certainty before the holiday season.
And William, how are the markets looking?
Well, let's take a look at how things have closed in Asia. And in fact, it's been broadly down across the board, except in Japan there. You can see almost 2% up on the Nikkei. That's a reaction to news that Prime Minister Yoshihiko Noda has called snap elections, which will be held in December. The market's obviously liking that, hoping that the opposition LDP party, if it gets in, will ease monetary policy. Meanwhile, let's take a look at how things are opening up here in Europe. And it's following on from previous sessions in America and in Asia, all in negative territory, also, of course, reacting to those GDP figures which we looked at earlier.
Now, we saw just a moment ago that the Nikkei was up, but Sony is bucking that upward trend in Japan.
It certainly did. In fact, it closed down by around 9% on the Japanese markets. That's partly due to the fact that it's borrowed almost $2 billion on the bond markets. Now, the reason that has put its shares down is that those bonds will be returnable, repayable. They can either get their money back, the bondholders, or they'll get their money back, as it were, in shares. So if you're a current Sony shareholder, you see all these other investors coming along who one day might be paid back in more Sony shares. It kind of dilutes the value of the shares that you hold, and therefore the price will go down. And that's what we've seen today by around 9%.
So Sony struggling there, but an up-and-coming technology company is making waves.
Yes, and this is Spotify, the digital music company. You can get music streaming it on demand with adverts, or if you pay €10 or $10 a month with no adverts. Now, clearly, investors think this is a good idea for a business model because they've just put up another $100 million. This values the company as a whole at $3 billion. So doing rather well for what was only recently a startup company. It's not going to be plain sailing, though, because it's got to compete not just with the likes of Deezer, based here in France, a similar sort of product, but also the big giants of the tech industry, particularly from America, Microsoft, Google, and Apple, which is itself rumoured to be considering a streaming service for launch in the next few months.
OK, we're going to turn to Egypt now. It's just received a much-needed boost from the EU.
That's right. It's been given the half of a $1.2 billion aid package to Egypt. The EU is going to give it to help Egypt deal with its deficit of 11%. Ever since the revolution, Egypt has been struggling economically. The rest of the money, the other half of this aid package, is dependent on an even larger IMF loan, which is currently under negotiation. France 24's Sonia Dridi did talk in Cairo to the EU Special Representative for the Southern Mediterranean, and he said that a strong Egypt is in the EU's interests.
The future of Egypt is closely linked to the future of Europe. Egypt cannot survive without Europe, and Europe cannot survive without a successful democracy and a successful economy in Egypt. We need each other. So this is why Europe is the main partner for Egypt. Transition to democracy is vital for us.
And finally, it looks like a storm could be brewing in the tea industry.
Yes, this is after Starbucks has bought a chain of tea shops, I suppose you'd call them, in the United States. Teavana is the name of the brand. They've got 300 stores throughout the United States, and at the moment they sell loose leaf teas, exotic teas, kind of quite high-end premium sort of stuff. Starbucks says it wants to make them also into tea shops, so you can go in and have a cup of tea rather than just buying the stuff off the shelf. And the idea is to keep it separate from its Starbucks brand, go international with it, and do for tea what it has done already for coffee. In fact, the chief financial officer pointed out that tea is the second most consumed beverage in the world, second only to water. So you can see the scale of their ambitions on this front.
OK, thank you very much. Personally, I'm not a big fan, but are you?
It must be your French side, Claire.
Yes.
Well,
then again,
drinker.
I don't like red wine either, so that's just a little bizarre. But anyway, that's enough about me. Thank you very much, William, and thank you for watching. Stay tuned to France 24 for another update in just a few minutes' time.